As the world awaits the outcome of the U.S. elections, the winner remains uncertain, but markets typically prefer clarity. On balance, a clear Trump win will be more favorably viewed rather by markets primarily for tax policy reasons, although a clear Biden win will at least mean a clean handover. The current situation is exactly what markets theoretically did not want: an unclear result, a candidate declaring themselves the winner without official verification, as well as the legal threats that we have seen. For more now on this, we're joined by Andrew Duvenage. He's Managing Director at NFB Private Wealth. A very good afternoon to you, Mr. Duvenage. Thank you so much for joining us here on the SABC News channel.
Thanks for having me.
All right, so how is this tense countdown likely to affect market confidence if the election result is contested?
Well, the irony is, as you said, is markets don't enjoy uncertainty, and uncertainty is exactly what we've got at the moment. So you would expect markets to be battling with that, but we've seen global equity markets certainly roaring ahead over the last day or two. The interesting take out of that is if you look specifically at the tech sector, looking at the NASDAQ in the US, is it was up nearly 4% yesterday, and currently I see it's up around 2.5%. And I think that that's indicative of the Biden campaign being in the ascendancy and markets almost having a sigh of relief, because you could say that the tech companies certainly were more aligned with the Biden campaign and agenda, and there could have been some fear of retribution had there been a Trump win. So we've seen that drive ahead. I think the other thing that's in play at the moment is should the Biden campaign be successful, is markets are looking forward to the unlocking of a significant stimulus package to support the U.S. economy in the face of this sort of second COVID spike, and markets are reacting very positively to that at the moment. What we've also seen is dollar weakness. There's a lot of people are looking towards the rand and saying that the rand is particularly strong at the moment, but you've seen the dollar being weak against most currencies and against safe haven currencies like the Swiss franc. And what we can pick up from that is maybe the longer term view of markets is one of concern around the US, concern about what Biden tax cuts could mean, and concern about whether the US economy will continue to recover. The one thing, if you would depersonalize the previous 4 years in the Trump administration, is they had a very, very strong economy. The equity market did exceptionally well. Unemployment was at record low levels prior to COVID hitting. And as much as the Biden campaign maybe would have put that at the feet of the Trump administration, is the whole of Europe's battling with it. The whole of the world is battling to deal with COVID. So the question really from markets is, will the Biden administration be able to continue the momentum that was here before COVID in the US markets and the US economy? And that remains to be seen. But it almost defies logic that markets have reacted so well to the uncertainty that we're seeing. And I think we look forward to getting clarity on which direction it will go.
Yeah, the race, of course, remains very tight as it is, but the numbers are favoring Joe Biden. What would a Biden win mean for Trump's tax policy cuts and the economy?
Well, the Biden-Harris campaign has been quite overt that they would repeal the Trump's tax cuts. The Trump tax cuts, which came into effect a few years ago, were definitely a shot in the arm to markets, and obviously positive because there's lower tax and it left more money in the consumer's hands. The repealing of those tax cuts would be perceived as negative to markets, obviously more onerous on companies, and there are indications that even at a personal level is as much as 80% of the US population would actually have an increase in their tax rates, which would be pretty hard on a consumer-based economy. So that would typically be negative, and potentially the weakness that we're seeing in the US dollar at the moment, you could read into that the currency is almost reflecting a longer-term fear as to where the Biden administration, what its impact would be, whereas the short-term movement on the equity market is more focused on stimulus coming into effect relatively soon, and not so much pressure on tech. We have to remember that if you look in the last year or so, the primary driver, and certainly post the COVID crash that we saw, the primary driver of equity markets has been the tech sector. It hasn't been broad-based. So I think that's what you're seeing from the short-term view. But there are concerns that the Biden administration would be negative from a tax perspective. You could counter-argue that and say at least there'd be more stability stability is the one thing with Donald Trump was he shot from the hip. His foreign policy was America first and was aggressive, and markets didn't necessarily enjoy that. And maybe what markets could look forward to is certainly more stability, a less adversarial relationship with China in terms of trade wars, and that could feed positively, certainly for countries like our own, who are far more closely aligned with emerging markets, and our resource type of element of our economy certainly needs a strong China.
Yeah, that was supposed to be my next question as to how are we likely to benefit? Let's bring it to the African continent and bring it here home to South Africa. How are we likely to benefit from the elections there in the US?
Well, there are different ways that we could benefit. Is a less America first type of policy from Biden could be perceived as more beneficial for emerging markets, whereas the America first type of agenda certainly could be more difficult. So that could be a positive. But the reality is that America is still the biggest economy in the world. It is still the biggest stock market in the world, and you need that market and that economy to perform well. So as much as a foreign policy from a Biden administration, which is supportive of global trade relations, would be good for us, we also need that economy to fire. And I suppose the million or $1 trillion question that we have is, would the Biden policy be ultimately negative and take the steam out of what was achieved in the Trump administration, certainly before COVID hit? We have post-COVID seen some really strong numbers coming out of the US, and the question will be, if it is Biden, which it looks at the moment that it would be, is if Biden comes into the ascendancy and comes into the presidential hot seat, will they be able to maintain and generate that momentum, which would be good for the US economy, and by virtue of that would trickle down into the rest of the world. So as much as trade relations are important, you also need a strong US market and a strong US economy.
All right, time constraints, we'll leave it at that. We thank you so much for coming through. Andrew Duvenage is Managing Director at NFB Private Wealth, helping us to understand the issues around the US elections as well as the markets.